This is Shelley Craft coming to you live on SNN.Live. We're coming to you from the Sprott Natural Resource Symposium 2019 here in Vancouver. I have with me today Dan Wilton from First Mining. I'm going to give you two symbols. It's FF on the TSX and FFMGF on the OTCQX in the US. Welcome to SNN.Live.
Thank you very much. It's a pleasure to be here. Thanks for having me.
It's good to have you. Let's get started with a brief overview of the company. Please tell the audience, and we'll come back with some more questions.
Okay. Well, First Mining Gold is a gold project developer with 5 main projects, but really advancing a core portfolio of 4 of those projects in northwestern Ontario with 7.3 million ounces of indicated resource and another 3.6 million ounces of inferred.
So what's a brief history on the company?
So the company was put together in 2015 and 2016 as kind of a brainchild of Keith Neumeyer, who's a well-known guy in the mining industry. Keith's the CEO of First Majestic and one of the founders of First Quantum. Keith and a few individuals of foresight had the vision of putting together a public company to acquire mining projects, particularly gold projects. In the downturn, we all remember how difficult the capital markets were in 2015, 2016. So they acquired, in about 12 months, they acquired 8 different companies and put together what really is an outstanding portfolio of projects that most of them are sitting in Canada in great jurisdictions to develop, most with established resources on them, many of those at or in excess of 1 million ounces, and a couple of projects that we are spending most of our time and energy now moving forward. And that's the Springpole project, which is a 5 million ounce gold equivalent, very meaningful potential production, which we have going through the permitting process, and the Goldlund project, which we're drilling on right now and looking to expand on what we think is a 50-kilometer really exciting exploration trend.
What would you say is the competitive advantage of First Mining?
Well, I think when you look at First Mining as an investment versus other potential, gold developers or whether it's project generators, we do have a diversification of projects. We have, 5 projects with at or around 1 million ounces or more. Our projects are all in great jurisdictions. Most of the resources are in Canada, in places like Ontario and Quebec and Newfoundland. The good people at S&P did a study last year looking at what the cost of developing a resource is, just in terms of exploration. Once you've already found it, exploration to add ounces. They established that from 2011 until last year, the average cost to add an ounce of gold was like $36 US. Well, we have, between our indicated and inferred resources, in excess of 11 million ounces, and we're trading at $12 US an ounce right now. So really compelling value for projects that still have the opportunity to grow, but don't need to grow to have a kind of a critical mass where they could be developable. And we have a great team that we've pulled together over the course of the last few months. I'm reasonably new to the story. I've been here about 6 months. There's a great team that was in place, but we've made some critical additions to it, and I think have a great team to move these projects forward.
From what you can tell me, because you're a public company, what are some growth drivers coming in 2019?
So the main drivers for us over the next year, we are advancing our Springpole project through the permitting process, which is not terribly exciting, but really important and a big value driver. But importantly to that, we did some very good metallurgical work last year where we think that we have a path with a new processing flow sheet to increase the recoveries at Springpole from 80%, where they were scoped in our 2017 PEA, to in excess of 90%. So we're right now updating our preliminary economic analysis, and we'll have that out before the end of the year, which will reflect on what is already a 5 million ounce resource, an increase of 10% on the recoveries. That's an incremental 500,000 ounces that are likely to fall into a mine plan. And we're very excited about what we think that's going to do to the capital and operating cost per ounce. And the next catalyst is at our Gold Lund project, which is located in the same area in northwestern Ontario, where we have an 800,000 ounce indicated resource and an 870-ish thousand ounce inferred resource that we put out in March of this year. But we are currently drilling at a prospect that's 10 kilometers away from that initial resource. All in part of what we have on Gold Lund is about a 50-kilometer trend of a big structural corridor. So we drilled 10 kilometers away at this prospect called Miller last year. Drilled 8 holes. All 8 of those hit the structure. 7 of those holes had visible gold in them. And so we're back drilling some infill and then stepping out at Miller to see how big we think that can become. So it doesn't all express to surface, but our intention is to define a strike length and ultimately be able to move that into resource as well and understand if on this big, really attractive structural corridor, are we dealing with one resource, and the Gold Lund main resource still has lots of room to grow, or are we dealing with sort of a string of pearls along this big structural corridor? So we're very excited about that and should have some drill results coming late August, early September.
Let's get your website out for more information.
It's www.firstmininggold.com.
Ladies and gentlemen, Dan Wilton, First Mining Gold. 2 symbols, FF on the TSX and FFMGF in the U.S. on the OTCQX. I'm Shelley Kraft, this is SNNLive, and we're coming to you live from the Sprott Natural Resource Symposium 2019 in Vancouver. Dan, thank you so much.
Thanks, Shelley. Thanks for having me.